Welcome, everyone, to our exciting journey into the world of investing. Whether you are a student, a working professional, or a retiree, this video is tailor-made for you. We'll demystify investing and show you how to grow your money like a pro. So, let's dive right in. Before we explore the fascinating world of investing, let me share an eye-opening fact. Did you know that if you had invested just 10,000 rupees in a popular Indian company 10 years ago, it could be worth more than 100,000 rupees today? That's the power of smart investing. Understanding the basics. To begin, let's lay the foundation. Investing is essentially putting your money to work to generate more money over time. Think of it as planting seeds to grow a fruitful tree. Now, let me break it down for you with a simple example. Meet Ramesh. Ramesh, a salaried professional, decided to invest a small portion of his monthly income in the stock market. He diligently researched companies, picked a few promising ones, and invested wisely. Over time, Ramesh's investments grew steadily, providing him with additional income and financial security. Imagine the possibilities when you put your money to work too. Types of investments. Now that you understand the basics, let's explore different investment options available to you. Remember, it's crucial to diversify your investments to spread the risk. Here are 3 popular options: stocks, mutual funds, and real estate. Stocks. Meet Neha, a college student who wants to start investing. Neha decided to invest in stocks, which are shares of ownership in a company. She invested in a well-researched tech company and witnessed remarkable growth as the company introduced groundbreaking innovations. Neha's investment multiplied, giving her the confidence to explore further. Mutual funds. Now let's meet Rajesh, a middle-aged professional seeking a balanced approach. Rajesh opted for mutual funds, where funds from multiple investors are pooled and managed by professionals. This diversification minimizes risks while potentially delivering stable returns. Rajesh's investment steadily grew, giving him peace of mind and the freedom to pursue his passions. Real estate. Finally, let's look at real estate investments, which can be highly rewarding. Meet Priya, a working professional who decided to invest in an upcoming residential project. As the property's value soared due to increasing demand, Priya enjoyed substantial returns. Real estate investments can be a great long-term strategy for wealth creation. Setting goals and risk management. Investing without a goal is like sailing without a compass. It's essential to define your financial goals and determine your risk tolerance. Let me share a couple of examples to illustrate this. Retirement planning. Meet Suresh, who planned his investments to secure a comfortable retirement. By setting aside a portion of his income in retirement funds and long-term investments, Suresh is on track to enjoy his golden years stress-free. Start early, and your future self will thank you. Emergency fund. Imagine you suddenly face unexpected medical expenses or lose your job. That's where an emergency fund comes to the rescue. Let's take the example of Meera. Meera, a young professional, understood the significance of having a safety net. She consistently set aside a portion of her income into an emergency fund. When an unforeseen car repair bill hit her, she was relieved to have the funds readily available. Building an emergency fund ensures financial stability during challenging times. Navigating the stock market. Now, let's delve into the exciting world of the stock market. But remember, it's essential to navigate it wisely. Here are some key tips and strategies to help you make informed decisions. Tip 1: Research and analysis. Research is the backbone of successful investing. Meet Arjun, an investor who spends time studying company financials, market trends, and expert opinions before making investment choices. By equipping yourself with knowledge, you can make informed decisions that yield favorable results. Tip 2: Dollar cost averaging. Dollar cost averaging is a powerful strategy to reduce the impact of market volatility. Let's take the example of Maya. Maya decided to invest a fixed amount regularly, regardless of market conditions. When the market was down, she could buy more shares with the same amount of money, and when the market was up, she benefited from the overall growth. Over time, this strategy helped her achieve consistent returns. Tip 3: Long-term perspective. Investing is not a sprint, it's a marathon. Keeping a long-term perspective is crucial. Let's meet Rahul. Rahul understood that short-term market fluctuations are part of the game. He invested in quality stocks with solid fundamentals and patiently held on to them, allowing his investments to grow steadily over the years. Having a long-term approach can help you weather the ups and downs of the market. Segment 5: Avoiding common mistakes. Now, let's shed light on some common mistakes that beginners should avoid. By steering clear of these pitfalls, you can safeguard your investments and maximize your returns. Mistake 1: Emotional investing. Emotions and investments don't mix well. Meet Karishma. Karishma got caught up in the hype surrounding a trending stock and made impulsive decisions based on emotions. Unfortunately, the stock's value plummeted, leading to significant losses. It's essential to stay rational and make decisions based on research and analysis, not emotions. Mistake 2: Lack of diversification. Putting all your eggs in one basket is a risky move. Let's see what happened to Rohan. Rohan invested his entire savings into a single company's stock, hoping for a quick windfall. Unfortunately, when the company faced unexpected challenges, his entire investment was at stake. Diversifying your investments across different sectors and asset classes can mitigate risks. Congratulations! You now have a solid understanding of investing for beginners. Remember, investing is a journey that requires patience, research, and a long-term perspective. Start small, educate yourself, and gradually expand your portfolio. Before we wrap up, let's recap what we've learned today. We explored the basics of investing, discussed different investment options such as stocks, mutual funds, and real estate, emphasized the importance of setting goals and managing risks, provided tips for navigating the stock market, and highlighted common mistakes to avoid. Now, armed with this knowledge, you can confidently embark on your investing journey, making informed decisions and working towards building wealth. Remember, the earlier you start, the more time your investments have to grow. Wishing you all the best on your path to financial success. Until next time, happy investing. Thank you for joining us today. If you found this video helpful, please like, share, and subscribe to our channel for more valuable content. Stay tuned for future videos on personal finance, investment strategies, and wealth creation. Take care and see you soon.